On the heels of the announcement by Saudi Arabia that they want to dump the dollar, or so they say, perhaps to get attention from U.S. lawmakers who are threatening to cut off their war funding, there is this now. China, for the fourth month in a row, is hoarding gold. Is there a message being sent globally about fears or expectation of things to come economically? Joining us now is economist Richard Wolff. Richard, I have to ask, for 4 straight months now, the Chinese, according to several press reports, have been buying up gold. Here's the headline, the latest headline. People's Bank of China, central bank, adds 360,000 ounces of gold. What's going on?
Well, I think the Chinese are doing 2 things. Up until the past, they took the excess money they earned because they export more to the United States than they bring in. They took that excess dollars that they had accumulated and held on to them, using the dollars as what we call reserve currency. But the more their relationship with the United States deteriorates, the more the economic dominance of the United States shrinks, the more prudent it is not to hold your wealth in the form of an economy with a currency that's not so sure for you. So they're diversifying. Before this, they bought more euros. Now they're buying more gold. And it's also a sign that if you think turmoil is coming, you want something solid like gold, not the paper that is in the end only a promise of whatever government stands behind the paper, and so they're shifting from dollars to gold.
We talk about China because they're the second biggest economy in the world, but I'm looking at the list here, and there's 5 countries that are seemingly doing the same thing. The 5 countries that are, I guess, owning the most gold right now is the United States, then Italy, Germany, France, and Russia. Any pattern you see there?
Yes, again, these are what we call cautionary holdings. That is, you buy gold when it is less risky in your mind than holding the currencies, the major currencies of the world, the Chinese, the euro, the dollar, the yen, and so on. And what you're seeing is more and more of these governments discovering that world trade is being played with, above all by Mr. Trump, that this is causing damage, but it's not going to stop because it's good politics at home for Mr. Trump. So they're taking the cautious step of beefing up their gold holdings because in a shaky world with countries shifting, gold tends to hold on to its value better than other things.
They're doing something else which is, I think, interesting. I'm not sure I understand it, but maybe you do. Not only are they buying more gold, they're also buying something called gold-backed cryptocurrency. What's that mean?
Well, cryptocurrencies are these new kinds of currencies that are produced and issued by a variety of companies and individuals. And again, it's diversification, because sometimes you see danger not just in currencies, the usual ones issued by a government, but also in gold. Gold goes up and down, and you don't want to just become safer by going from official currencies to gold. Now you have a third alternative didn't exist until a few years ago in these new cryptocurrencies, and you can move a little bit, it's never very much, but a little bit into that, because it's simply the old adage, don't put all your eggs in one basket. These are the ways for the very wealthiest in the world, countries, big banks, and so on, to diversify.
Final question, from the standpoint of a regular guy out there, or gal, who happens to be watching this newscast and watches Richard and Rick talking about the fact that China and all these countries are buying up gold. Does that mean they need to go out and buy more gold for their portfolios, no matter how small they may be?
Well, you know, it's always a question. You got to weigh whatever it costs to go in and out of gold. But if you actually have some money saved up and you don't have it diversified, you always should diversify. You should have, if you can, without too big an expense, have some stocks, have some bonds, have some cash, and yes, have some gold. If I wouldn't put a very large portion, but some of that, simply again on the theory that you don't want to be all buried in one kind of thing, because if that doesn't go well, where will you be? So you spread your risk, it's called.
Don't be in one thing in case that happens to be a bad thing.
You got it.
Richard Wolff, you're the best. Thanks so much for your knowledge and your wisdom, and we appreciate talking to you all the time. We'll do it again soon.
Thank you, Rick. Glad to do it.
All right.